shareholder entitlements. There's several shareholder entitlements or rights, and we'll run through them all now. So share purchase plans. This is where a company offers shareholders, existing only shareholders, the opportunity to purchase shares at a discount to the market price. Now it's usually a fixed amount of shares at a particular discount to its current trading price, and it can be a great opportunity to generate some extra profits from your shareholding, and we'll analyse these in further detail in future tutorials. Rights issues is where companies, very similar, offer a right to purchase a particular number of shares at a particular price, and these rights can be actually traded. They can be bought and sold if you don't go through with your entitlement. Share buybacks. Now quite often companies will go into the market and offer to buy back shares from small shareholders at a particular price, or they may actually go and buy at market, which effectively reduces the number of shares on issue and can potentially increase the value of your shareholding. Dividends. Obviously, as a shareholder, if the company pays out dividends, you're entitled to these dividends. Quite often companies will actually pay out a special dividend. So this is an extra dividend on top of their existing or their current dividend amount. As a shareholder, you're also entitled to attend and vote at company general meetings. You're also entitled to receive annual reports. So the bid and ask spread. Basically, this is something that a lot of investors don't actually see, particularly if they're using a very generic trading platform and trading from home, or perhaps trading over the phone with a broker. But actually, every single stock in the market has a spread. Rather than having a last sale price or an actual price, we have a bid and ask spread. Now this is a list of people who are willing to buy the shares and what price they're willing to pay, and a list of people who are wanting to sell the shares and the price that they're willing to sell at. When running through the entire bid and ask spread, you can see here the picture below shows the ASX code, which might be BAP, XYZ, whatever the stock code might be. For a complete list of stock codes, visit the ASX website. We also have the last sale price. So the last transaction that took place will be listed here. Now this could be from yesterday if the market's shut. It could be from quite a while ago. Even though the market might be open, that stock may not have actually traded in the last minute, 2 minutes, 5 minutes, 10 minutes. You don't know how old this last trade is without checking the course of sales. We have the plus or minus move. So basically this is how far is the stock up today from its up or down today from its previous close. Important to note that is not from today's open, it is from the previous closing price on the previous day. Percent move, well this is fairly basic, it's basically a plus or minus move divided by the share price. So how much of a percent impact did this have? And this is obviously taken on the closing price from yesterday as well. The bid and ask spread, so this is essentially the top buyer and the top seller. What is someone willing to pay for it and what are they willing to sell for? And the spread between the two. Highly liquid stocks have a very narrow spread, so they might be only a cent or two apart. Very illiquid stocks have quite a wide spread. You might actually have to move your order down quite considerably to get a fill on the stock. And the same with a buy, you might have to work your buy order up quite significantly to get a fill on that position. Now the open price is the open price for that particular day. The high is the high of the stock for that day. Sometimes you might have 52-week high, which is obviously the high for the year, or the last 12 months. The low is the low for the day, and the close is the closing price of the previous day. There are actually several phases in the market. We start off with the pre-opening phase, which runs right up through till the market opening phase, when the market opens at 10 AM Eastern Standard Time. The opening phases are actually staggered. So depending on the stock name, whether it falls into the A to B, C to F, G to M, N to R, or S to Z, as you can see here on the screen, they are categorised into different groups. Now each stock opens at a different time to stagger this opening phase. Now the important thing to note, the difference between this and the closing phase is that in the opening phase they are staggered. In the closing phase, everything is closed at 4:10. So every particular position, no matter what the code might be, is all closed at the exact same time. After the opening phase, we move on to normal trading, which runs right through till 4 PM in the afternoon. At this time we go into the pre-open prior to closing phase, which runs right through till 10 past 4, and in this stage we have our opportunity to place bids, buy and sell, or put an offer in to buy and sell stocks. In this 10-minute period, no actual transactions take place. However, it goes into a matching phase where we can basically compete with other buyers and sellers to match our positions off for the end of the day. So there's one last final transaction for the day, and we get 10 minutes to place our orders. At that night 4:09 to 10 past 4, we go into the closing single price auction, where everything is matched up against each other. You can see here on the screen how we match these positions again against each other, and quite a few transactions happen at once. And at the 10 past 4 we go into that phase where we're back into the pre-opening phase again, where everything is closed, waiting for the previous day. So this course has basically been a real beginner's guide or an introduction to the stock market. There's a lot of sectors that we've briefed over that we probably should have focused and spent a little bit more time on. But what we've done is we've decided to actually run some extra courses on topics like technical analysis, fundamental analysis, share purchase plans, options, equities, CFDs, portfolio management, and a whole range of other topics. So what we'll do, we'll offer all of the members of the Mint Trading website access to these tutorials, and also offer some live seminars and some courses over the next few months. So if you're interested, feel free to visit the www.minttrading.com.au website, become a member today, and subscribe to receive further tutorials and analysis of the market.